Welcome to Matters Financial, Geopolitical from Frontier. I trust you had a good weekend. It's been rather warm here of late. I participated in Deloitte East Africa Forum this morning regarding the outlook for the East African region. And I said that Kenya has a big geopolitical role to play in this environment. I was talking about the extension into the Indian Ocean, the fact that it was a 3 billion market. And I said I didn't think there was as much political risk as past years going into this election. Essentially, I think it is for the president to lose, and I don't see him losing it. And I think he's got enough in his toolbox to make sure he wins it. Macro thoughts, my goodness, the pound has had a dramatic time, leaving traders very skeptical of a quick recovery. Fortunately, I had a stop at 126, for which I'm very grateful. But it looks as if it's going lower. I'm afraid we're trading below 124 at the last count. And I'll put up a chart showing you that. I think sterling has become a prisoner of the hard-edged rhetoric. I've written a piece this weekend. Let me read you the second half, which is about the United Kingdom. Given that the FT Africa conference was held in London, it is worth turning to some tectonic shifts in sterling asset prices. The catalyst for the sell-off in the pound were comments by the Prime Minister Theresa May at the Conservative Party conference. We should not let things drag on too long. Having voted to leave, I know that the public will soon expect to see on the horizon the point at which Britain does formally leave the European Union. She said last Sunday there will be no unnecessary delays in invoking Article 50. We will invoke it when we are ready, and we will be ready soon. We will invoke Article 50 no later than the end of March next year. These comments, coupled with hardline comments on immigration, sent sterling into a tailspin. This tailspin culminated in the early hours of Friday morning, when most of us were tucked up in bed and in the blissful land of Nod. When the pound fell as far as 112 on some electronic trading platforms, though most financial news wires are talking about a low of around 118. It is still a matter of speculation as to what could have led to such a precipitous fall. Some are blaming automated algorithmic trading systems which buy and sell enormous amounts of foreign exchange on the basis of word counts and so on, fat fingers and all kinds. The point is, sterling flash crashed big. The United Kingdom runs a near enough £100 billion current account deficit, and debt to GDP is somewhere around 90%. And here again we can see that Prime Minister Theresa May has nailed her colours to the Brexit mast. The language of Brexit is hard-edged and is not considering the impact on the financial markets at all. Sterling pound has become a prisoner of the hard-edged rhetoric. And I was quoting, the Falcon cannot hear the Falconer, and I tweeted yesterday, Carney and the Bank of England are left with no good options. Gilts are a monster short. If you want to link to the 10-year generic bid yield, that is just below on rich wrap-ups. Sterling is down 16% this year. It's a hefty fall, but not as steep as 1981, 1984, 1992, or 2008 yet. You're going to want to have as much data as possible to fuel your time machine, says Luke Sante. I rather like that. I like this photograph of the Calvary Ngong Hills. The photo is by B. Gruffy. And I took this photograph from the hospital. I was visiting my dad who's had his pacemaker inserted now, of the blooming jacaranda, and then I realized there was a hashtag jacaranda propaganda. Behind every word is a whole world, says Heinrich Boll. That's pretty powerful. And then I like this photograph. Kiarostami's human time should be distinguished from the temporal wastelands of Warhol's anti-film. You have to read the article. It's an earlier review of books. Political reflections. Here's everything you need to know about the second presidential debate. I caught highlights on the BBC World Service. And I then tweeted Hervé, But I listened to the highlights and it was rancorous and it was ugly. But did Hillary Clinton deliver the coup de grace? This is the point. The apology, have a look at Trump's face. You couldn't have a more squashed face, a more painful apology, mea culpa. Reverend Daniel, this is a distraction from the issues of the real world we live in, says the man who lives here. And I asked a couple of days ago, is Trump teflon? His moral standards, listen to this, are so low. He's despicable. The way he treats women, he's beneath contempt, said Kenneth Filipski, 75. So would Filipski vote for Clinton? The Bakersfield residents widened. Of course not. I'm still supporting Trump. Hillary is a terrorist, he said. This is the issue. I don't think the polls are picking up the true depth of Trump support, partly because people don't want to admit it. Inside Trump Tower, and increasingly upset and alone Donald Trump, it has been his pride, and his palace, a soaring black skyscraper overlooking Manhattan, that seemed to match Donald J. Trump's ambition and ostentatiousness. But Trump Tower since Friday afternoon has become a kind of lonely fortress for its most famous occupant, who holds up inside, increasingly isolated and upset, denounced almost every hour by another Republican official. So he remained inside his enormous penthouse apartment on the 66th floor in his corporate suite 40 stories below for almost all of Friday and Saturday. He's obviously gone on the attack with respect to Bill Clinton. So it remains, although the markets are calling it 22% Trump, 78% Hillary Clinton, I don't think it's nearly as wide as that. In a piece for the German tabloid newspaper Der Bild, Frank-Walter Steinmeier wrote, "It's a fallacy to think that this is like the Cold War. The current times are different and more dangerous." He laid the blame mostly at Russia's door for provoking the conflict between East and West. The country has been accused of deliberately targeting aid convoys and hospitals during the assault, but said during the Cold War superpowers had red lines and respected them. He said in a world with many regional conflicts and the waning influence of the great powers, the world is unpredictable. But despite all the frustration, disappointment, and deep suspicion on both sides, it is important to continue to look for ways to put an end to the madness in Syria. I couldn't agree with him more. Außenminister Steinmeier warnt vor Eskalation. Es ist gefährlicher als kalter Krieg. It's more dangerous than the Cold War, is what he's saying. And then this also caught my attention. Peter Pomerantsev, a student of 21st century propaganda, says the underlying goal of Putin's domestic disinformation is less to persuade than to engender cynicism. When people stop trusting any institutions or having any firmly held views, they can easily accept a conspiratorial vision of the world. Putin's Kremlin is weaving a web of incongruous but useful strands. Its conservative nationalism is congruent with that of rising European factions on the right. Its anti-Western, especially anti-American message resonates with the European left. It funds European green groups whose opposition to fracking serves Putin's agenda of keeping Europe dependent on Russian gas. And finally, I like this photograph, Good Morning Sunrise in central Harare from Zimbabwe pics. Let's move on. International markets slower but still steady job gains keep a Fed rate hike on track for December. That's clear. Let's look at the currency markets. Euro dollar 111.76, dollar index 96.702, Japanese yen 103.18, Swiss franc 0.9785, the pound, which is at 123.76, is now back at 124.10. So a little bit of an earlier recovery, but let's see if it can hold. The Aussie 0.7585, Indian rupee 66.5855, South Korean won 1108.69, The Real 3.2213, Egyptian pound 8.8803, but it's hit a record low on the black market rate, and the rand at 1378. I like this photograph from Michiku Kakutani, autumn Mount Fuji, Japan, via 500 pics. It was indeed a brutal week, battering the British markets as Brexit risks crystallise. Investors finally woke up to the reality of the UK government's approach to Brexit. Have a look at this comparison between the pound drop last week compared to the Brexit drop. Gilt yields spiked. I think that's a monster short, and something that is probably the third trade of the year. The inflation outlook is swollen, and speculators apparently made a killing in this flash crash as sterling net shorts rose ahead of the crash to a new high. The flash crash last week was more redolent of a frontier currency than the world's fourth most traded. Only Sierra Leone's Leone and the Mozambique Metical have dropped more than the pound since the June 23rd referendum. Five-year forward UK inflation swap rate. Look at what's happened here. This has become de-anchored, and the speed of the move goes back to Virilio's wealth is the hidden side of speed, and speed the hidden side of wealth. Commodity markets, gold dropped below its 200-day moving average, but I think we've just come back above it again at 1262.61. Crude oil, take a look at that. That's just below US crude oil, just below the $50 level, and this is a key level for it to push through. I don't see it pushing through now much more. Emerging markets, Trump hands peso bulls a new gift even before the debate night. That was on the basis it's a proxy for Trump's chances. Sub-Saharan Africa, this is the first half of the article for which I read you the second half a moment ago. The article is called "The Falcon Cannot Hear the Falconer, Losing Control of the Narrative." One of my favourite poets is the Irishman W.B. Yeats, and one of my favourite poems is called "The Second Coming," and the poem begins thus: "Turning and turning in the widening gyre, the falcon cannot hear the falconer. Things fall apart, the centre cannot hold." According to Google Analytics, this poem has seen a parabolic surge in mentions, and I'm sure you will understand why when you read the poem in full. Last week, I attended the Financial Times Africa Summit at Claridge's in London. Hannah was impressed that the lift had a sofa, and of course very little beats a really grand hotel, especially one as venerable as Claridge's. The president of the African Development Bank, the very dapper Akin Adesina, said Africa is not falling apart. Pravin Gordhan, who described himself as more of an activist than a finance minister in South Africa, admitted he was just one phone call away from being fired. The FT editor Lionel Barber checked whether his phone was off for the duration of the interview. Overall, with the exception of Mr. Ibrahim, Mr. Colimo, and myself, it still felt like everyone was still singing from the same Africa Rising hymn sheet. When it was my turn, and bear in mind I had Tito Mboweni on my right, on my left, ex-South African central banker, and I said Sub-Saharan Africa is predicted to grow at its slowest rate since the early 1990s. The challenge now is that you can drive a truck through the chasm between the Africa Rising rhetoric and the reality, slowest GDP expansion in more than 25 years. If you want to market measure of the chasm, look at the official FX rates and compare them with the black market rates in so many countries. In Nigeria, the official rate is around 311, but the black market rate is close to 500. Look at Angola. These black market rates are a real-time temperature gauge, and they're clearly emitting a signal. The point is that policymakers have now lost control of the narrative, and they need to adjust the rhetoric. Otherwise, credibility starts sliding. It's a mystery to me how there is even a shred of credibility left in Nigeria. It is clear now that the denouement is not being sidestepped, but instead is being hurtled towards. And I spoke about the UK. Economic growth in Sub-Saharan Africa this year is set to drop to its lowest level in more than 20 years. Have a look at the transcript of the African Department press briefing given by Mr. Selassie. A very interesting perspective that is given. If you get a chance, do have a look at it. And then I'll put up a photo of Akin Adesina, who said Africa is not falling apart. Ethiopia has declared a state of emergency amid protests. Declaring the state of emergency, the Prime Minister said, "We put our citizens' safety first. Besides, we want to put an end to the damage that is being carried out against infrastructure projects, education institutions, health centres, administration and justice buildings. The state of emergency will last for 6 months." Ethiopian protesters have attacked factories in Africa's rising economic star. Fana Broadcasting, which is seen as close to the state, reported on its website that 11 companies, ranging from textile firms to a plastics maker to flower farms, have been damaged or destroyed, with more than 60 vehicles have been torched. Dutch firm Sele QT said its 300-hectare vegetable farm and warehouse had been plundered. Another Dutch firm, Africa Juice, said its factory had been partially destroyed. The manager of one of the Turkish company's textile firm, Sagan Dima, told Reuters this week at least a third of his factory was burnt down. And this goes back to comments I've previously made about the revolutionary contingent attaining its ideal form, not in the place of production, but in the street, and I think it clearly applies to Ethiopia. Zanzibar, trouble in paradise, writes The Economist. The young woman's voice is flat as she describes a group of masked men breaking down the door while she slept in March this year. She says she was then forced into a car, beaten, gang-raped. Afterwards, a passerby found her abandoned on the roadside, unable to walk, unsupported. It was so painful, she says, staring into the middle distance. When I remember it, it's a trial. The woman is one of dozens of people on Zanzibar who claim to have been attacked by plainclothes militiamen known as zombies since March 2015. Their crime supporting the main opposition party. This is another flashpoint which we've got to keep an eye on. South African all-share down plus 1.91% this year. Dollar versus rand. It's trading quite firm, actually, given the overall context. Egyptian pound has tumbled to a record low on the black market of 14.2 versus an official rate of 8.8. Free float founders as Nigerian Naira hits black market low. The float is anything but free, according to investors including Aberdeen Asset Management and Duet Asset Management, with the central bank holding the Naira in a tight range around 315 per dollar. Since the beginning of August, most local businesses and Nigerians going abroad can't get foreign exchange from their banks and have to turn to bureau de change, which have more leeway in setting prices. Black market street traders openly applying their services across the country. They sell each dollar for about 475 Naira, if you can get it. Back in January, we never knew the Naira could head toward a staggering 500. This is not the real value, but because the liquidity is not there, the pressure keeps mounting and the Naira keeps depreciating. Nigerian all-share down 2.82% this year. Ghana Stock Exchange Composite Index down 11.37% this year. Kenya will on October the 18th issue a 15-year infrastructure bond worth 30 billion shillings at a coupon rate of 12% to fund road, water and energy projects. It will surely be fully taken up. Audit now finds Imperial Bank savers lost 31 billion shillings to a fish farm. Kenya shilling 101.292. Nairobi all share down 5.17% this year. NSE 20 down 19.29% this year. Once again, thank you for stopping by. I do appreciate it.